The best experience is I'm in front of the screen, and I don't know if it's the right amount of coffee I drank or the time of day or the workout in the morning, but I just feel so connected, especially when there's an event-driven situation and the stock is gyrating up and down. I can almost, if somebody was sitting next to me, I could say, watch, this guy just made a mistake selling it down to 8. He doesn't understand that the going concern is blah, 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 blah. Watch how the stock's going to go back up to 950. And then it does. It's not because we're in the business to make money, not be right.
Mm-hmm.
You know, they sometimes they go hand in hand, but the best feeling is, again, when I just feel so connected to the market and to what's going on. Difficult is not a drawdown for me. Difficult is, wow, it's been 2 weeks since I had a great trade. I'm staying out of trouble, but, you know, I'm 2 weeks into a very slow period. And this happens every 2 to 3 weeks. And I start thinking, oh, no, it's over. You know, oh, no.
Welcome to the AlphaMind Podcast, hosted by Stephen Goldstein and Mark Randall. Before we head into this week's podcast, a quick thank you to our long-term podcast partner, the Society of Technical Analysts, the STA, who provide outstanding educational services and support services for people across the world of trading. Amongst their many outstanding services, the STA offer their brilliant home study course in technical analysis. This course is offered to listeners of the AlphaMind Podcast at a discount. You can find out more about this discount by going to our website, alpha-mind.net. The home study course has been put together by many of the world's leading technical analysts exclusively for the Society of Technical Analysts and takes you into a far deeper understanding of what technical analysis is and how to apply it effectively. Now, on with this week's podcast.
Well, welcome to this week's AlphaMind Podcast, and we're delighted to have Rick Bandazian Jr. with us. He's been on the buy side for a 17-year career. He's a pure prop trader, eat what he kills type of fella. But strangely, actually, in terms of why is Rick on this show, it's because actually Rick reached out to us at AlphaMind, and normally we don't accept too many people that reach out directly, and we tend to push people away. But what intrigued us was his passion for wanting to tell his story and the depth of his story. And we thought, giving our audience that story and its knockbacks and its moments of requiring agile behavior to understand how to cope with, a changing career would be very, very interesting to actually talk about and go into some depth. So we know he's got various styles, and let's understand what those things are. So I want to welcome Rick to the show, and perhaps Rick, the platform's yours initially, just a bit of a backstory about where trading came from, why trading is suddenly relevant for you, the sort of the corporate career, and then that changing more into a retail type career. And perhaps you can give us some color on that.
Will do. I had to reach out after listening to your recent podcast with Anna because I think that stuff is so fascinating. But anyway, thank you for hosting me. I discovered AlphaMind and what you guys do probably a couple of years ago. And as I alluded to the pre-call, admittedly, I never really focused on mindset and psychology. It really wasn't part of what I was doing because I've been trading event-driven. It's very short-term. I don't really have to deal with, holding on positions for days, weeks, and months at a time. So a lot of that psychology just didn't really come into play. I know if a trade's going to work really within a minute or not. And typically I'm out of it pretty quick. So we can dive into all those nuances, but it's fascinating what you guys talk about. I'm grateful for the work that you guys do, and I'm glad to connect.
So in terms of you just reversing back into the early days of that 17-year career, about sort of how you got into it and what it was like and what the challenges were early on and how you surpassed them. And I guess your role, from what I figured, changed slightly. There was an analytical side of you at one point, and the challenges of that, because we know that there's not a great link between someone that's a great analyst and someone that's a great trader.
That's absolutely true. That every analyst thinks they're very smart, and then when they sit in front of the screen and the capital allocator says go, they have trouble because even though the analyst and the portfolio manager are totally aligned, obviously, it really is a different job. A lot of the psychology and mindset and things that you guys talk about are really a PM's role, right? They have to manage risk and deal with drawdowns. So to answer your question, yeah, I went to Fordham University in the Bronx, and I guess I like to make my life difficult. So I went to investment banking right out of school. I did that for a couple of years. And had I known really the differences between the different opportunities on the buy side and the sell side, I probably would have leaned initially towards the buy side. But anyway, I did the banking thing for a couple of years and, very analytical, obviously. And then I got hired away to a firm called First New York Securities, but I was hired as an analyst there. And my PM traded event driven, which is exactly what it sounds like. Typically, every trade that we get involved has some sort of a catalyst. So I went that journey as an analyst. I got hired away to a bank prop desk. This is pre-08 when that was still a thing. And 08 happened and the entire desk got blown out. I landed back at First New York immediately because I kept good relationships with the people there. But when I was invited back, I was an analyst for another PM, but they also gave me my own pad. So that was the first time I was really in charge of my own business, so to speak. You guys know that's, you really are running your own business when you're trading prop. And, whether it's your guest on the show or people you've spoken to, everybody takes a long time to find your way and figure out what you're good at. It could take 2 years. Some people I've heard, it takes 10 years for them to really figure out their edge and what they're doing. And I was fortunate, lucky, whatever you want to call it. Very quickly, within a couple of months, I found that I had a knack for trading very short-term, event-driven, and news. And I was spinning my wheels with all these different strategies, and it was 08, so there's really not a whole lot of corporate action type stuff to do. And after, hitting a couple of big news trades, that was it. I sort of realized that I needed to throw all the other stuff away and really focus on that. So, that led into prop trading for, a long time. I did a quick stint at a family office trading prop. And then about 10 years ago, I completely went out on my own. And I still trade event driven. There's, if you don't adapt, you die, so to speak, as you guys know. So, what I do has changed quite a bit, but it's still all in the event driven universe. And then hopefully we'll touch on a lot of the psychology type mindset, which is really plays into this new strategy that I'm building, because you guys have talked about fight or flight, especially with Anna and, across a lot of your podcasts. Doing that exercise with this macro experiment that's a little bit more, intermediate term, I realized I was basically in fight or flight for like 17 straight years.
Yes, I think I was going to say you and many other people after their 17 years would realize much the same thing, that's their norm, right? And a lot of things that we do are waking up people to their norm and thinking, actually, that's a bad norm to be in.
Absolutely. I'll refer to what Anna said in the last podcast. She said trading is neuroscience, right? I thought that was such an interesting, profound statement to make. And something you guys said, presence is an intelligence. And I guess the older you get in this business, you realize that that's really what it's all about.
Yeah, absolutely. It's a superpower, but I'm sure we'll dig further into that. Steve?
Yeah, well, great. Thank you. Welcome to the podcast. Thanks for joining us. And, it's great to have somebody on who's talking markets. I want to just come back to this idea you said of, being an event-driven trader and, in a way, psychology doesn't come into play. We as a we tend to talk about performance rather than psychology. We believe all these different aspects of being a trader are performance factors. So psychology is part of it, neuroscience is part of it, but sociology, how we relate to things, people, that's part of it. So many different behavioral factors that drive all this and behind it. I often think of event-driven traders almost as some of the most psychological traders I've ever met, and the act of doing sort of event-driven trader, because it's less research focused than any other sort of trading. It's really intuitive. It's really sitting there, immersing yourself deep into the market, deep into the flow of the market, deep into the noise, deep into the feelings that generates for you, and then trading off the back of that.
I think the difference between a vanilla event-driven trader who maybe they have an ARB spread set, or maybe they're long something that was written up in the journal about an M&A story or whatever, and they're kind of hanging on for 2-3 weeks waiting for a deal. I don't run positions overnight, and what I'll do is I could talk shop about any one of those situations that an event-driven trader is involved in, but what I do is once some news comes out and a situation is created, I get up to speed on that as much as I can. And what I'm doing is I'm waiting for the next piece of incremental news to react to that. Now, that might mean a headline crossing the tape and I'm hotkeying something, but it also might mean that, okay, I'm up to speed on XYZ, and I understand that I'm making this up, there's a going concern issue and the stock is down from 20 down to 10. So when incremental news comes out, I'm instantly already up to speed, so I can fade moves that I think are wrong based on my experience or my intuitions or all these models that I've created. So you're right. There's a lot of performance and psychology, I guess, related to that. But when I think about drawdowns and all these other kinds of things, I think about the guy who's sitting in a position for 2 weeks that's having a big drawdown. Like I said initially, I know if I'm right or wrong in about 30 seconds. And if something's working, I'll let it go. So it is a little different, a little bit nuanced than a vanilla event-driven guy, if that makes sense.
No, because that is actually what I would consider event-driven trading.
Well, it absolutely is event-driven, but when it comes to all these psychological mindset things and dealing again with drawdowns and such, again,
this is a different angle on it. I mean,
it is, yeah.
I don't know if you know if you're familiar with the Last Market Wizards book, Unknown Market Wizards.
Of course, yeah.
Okay, so I coached Amrit Sal, who was one of the traders featured in that.
Okay, no kidding.
And he's about as event-driven as you can get.
Yeah.
And he's doing exactly what you've described. Okay, and in the book he tells a story of, suffering. He might have positions on sometimes, it's not pure sort of basis, but he tells a story of a time where he went into some data, an event. It was an ECB meeting. He'd positioned ahead of it that day, and then his keyboard froze exactly as the surprise announcement came out.
Perfect.
And got caught out. Couldn't get out of it. Couldn't get the other way, which he wanted to do in those what you call milliseconds.
Yeah.
And it dropped 25% of his P&L in seconds, in a matter of seconds.
Yeah.
That was what I call event-driven trading. One of the things I used to do, although I used to run longer-term positions sometimes, other times I'd be sitting there without a position on, going into an ECB meeting.
Waiting
for the first few words to come up. Sitting there sometimes just looking at the look on their face.
That's more my style. That's my style. Not so much with macro, but with anything event-driven, corporate action related.
Right. So to me, that's it's deeply psychological. You got intuition, you got feeling, you got sensing the market and sensing what you're feeling, and then just getting that okay, something's not right. Something doesn't feel right.
Yeah.
I think that's almost the purest form of trading. Okay, and I remember working with one guy, and he was a bank trader. He was an FX trader at a bank, and he called it FX arbitrage, which it wasn't. It was, he'd sit there just watching the market, and he'd watch always 3 different currency pairs as a triangle.
Okay.
And he just waited till something kind of went in him like that. But he could never do it as one currency. He had to hit 2 and allow the other one to go. And he didn't know which ones he was ever going to do. It was almost like just a reaction, and he could do it, and he'd leave it for seconds, and then he'd cover. Okay, it was like he had a 10 to 15 second window of opportunity.
Right.
Okay, that was it. It was funny. He was actually their most successful trader in the trading room. Okay, made a lot of money every year, in and out very quickly. But he had to be completely present to be able to do that.
Oh yeah. I'm glued to the screen starting at 4 a.m. every day. So
physically present and mentally present.
Yes.
And if he wasn't right, he'd lose money that day. He couldn't do it as well.
Right.
It would cost him not just missed opportunities, but he'd be out of sync with the market. So that's what I talk about, synchronizing yourself and the market as one. That's almost the most purest psychological state. You almost blend in. It's like you're part of the market. You're part of the matrix of the market.
Part of the matrix is right. It's a very human experience, right? When you're really connected to the market and pre-market, somebody's selling something, and I can just imagine the person not understanding the situation like I do and picking them off, or fading that move. It's very true. There are days when, like flow state, right? Like sometimes I don't know what it is. I just feel very connected, very flow state. And other days I'm sitting in front of the screen all day, but I'm not as feeling as connected. So I can relate to that.
Yeah, I think that what you've described is something that you're at ease with your style. You're at ease with your process. You trust your process. And as a consequence, in this flow state, you don't get as many psychological challenges for that moment of presence that you're performing. That's quite remarkable to achieve. I mean, because that's something that many want to achieve but just can't find it. So the fact you've found something that you're at ease with, that you've worked out, and it then becomes a bit of a dance, it's effortless. And I sense that, from how you've positioned that it feels effortless. And if something feels effortless, then you carry less emotional load with that, the fact you're performing, but it seems to be just part of you, like you say. You're intricately linked to the ebb and flow of the market.
Yeah, you nailed it. I think that's probably what I was trying to articulate before, that it does feel less psychological, maybe because it is this dance that I'm just effortlessly, flow stating in, I guess, was probably the way I should have said it. But yeah, that's a good point.
Yeah, and I think that's quite rare. I think a lot of people want that state. I mean, there's somebody else I coached a while back that mentioned, and he was trading ES, E-mini S&Ps as his thing. And maybe we'd like to hear about your thing a bit later, what that is. But that was his thing. And he said most of the time it was a struggle, but every now and then there was this moment that it just felt easy.
Yeah.
And he just wanted more of those moments going forward where it felt easy, because he just enjoyed it. And he came home and he was, connected with everything and not a pain in the ass and just a better person for it. But it's difficult, right? You have to work on it.
You got to work on it continuously.
Yeah. So what for you in that, working out that equation, of kind of your process and your methodology around, creating that approach? Was there anything from your back history that really, really helped you to define what that process looked like that you can share?
You know what? like I'm a very risk averse person, believe it or not. So, I like to use the analogy like an hourglass. So if I find a piece of news, for example, that's buried in a story or a filing, and I take a position, I get as big as I can. I just, sometimes I take all the liquidity. Imagine flipping that hourglass over. There's 95% of the sand is at the top of the hourglass still. That's my edge. And similar to the guy you were talking about before, the FX guy that traded 10, 15 seconds, every second that goes by, that hourglass is running down closer to equilibrium. And when I get near equilibrium to me means, somebody tweeted about it. Then Dow Jones ran a headline. That's as close to equilibrium as you can get, and then I get out. Do I get out and sometimes something continues to run or a short, gets destroyed and keeps going down? Of course, but I think it all circles back to just my personality to be very risk averse. So I need to always trade, obviously with edge. Everybody needs to trade with edge, but that hourglass has to be 95% full at the top. Otherwise, I won't do it. If I hang up with you guys and I'm staring at the tape the rest of the day and some news comes out on whatever, XYZ, and it's all over the tape, I won't even think about trading that because somebody's massively up to speed. And now I got to start doing my homework. I got to read about it. Was that priced in, et cetera, et cetera. That guy's going to rip my throat out. I have no edge. So to answer your question, yeah, it's just innate in me to be so risk averse. That if I want to take a position on the euro and I've got a view on it, I mean, that hourglass is pretty close to equilibrium, isn't it? In a slow motion trade, like a 2-week trade, 3-week trade. We can get into using positioning and all that stuff, which is what I'm trying to develop, but I hope I answered your question.
Yeah, no, absolutely. Thank you for that. Whilst it sounds like this has just been easy for you, I'm sure there have been times when it's not been easy.
Yeah, the difficult time for me, like I'm going through one right now, difficult is not a drawdown for me. Difficult is, wow, it's been 2 weeks since I had a great trade. I'm staying out of trouble because my P&L kind of looks like a set of stairs. That's kind of the way it's kind of always fortunately been for me. But, I'm 2 weeks into a very slow period, and this happens every 2 to 3 weeks. And I start thinking, oh no, it's over. Oh no, I'm not going to be able to do this anymore. I'm getting older. And then boom, out of nowhere, I hit something. So I try to remind myself of that. But those are my difficult mental time periods.
Oh, it's sort of doldrums so in a doldrum, you're still at your desk at the screen and it's quiet.
Yeah. Oh yeah. I'm
in the hours.
Because, I might make my entire month in 2 trades, and that trade window might be 6 minutes, by the time I get into something, and then that equilibrium in the hourglass hits, back to parity, then I typically get out. But if I'm not in front of the screen, experiencing my fight or flight, it ain't going to happen.
Yeah, and doldrums are they eat as much energy as being busy, right? You're still exhausted just doing nothing.
I think they're actually more exhausting to sit around. I could easily go sometimes 1 or 2 days a week trading 0 shares, and those are just difficult.
So Rick, just trying to put myself in the shoes of someone listening to this, someone who comes out and thinks, okay, I've got to do X, I've got to buy X, sell at Y, take my profit at, Y times 3, listen to my stop. There's that kind of formulaic element, which we're often told that, which new traders sit there thinking, oh, this is the way to do it. And then I'm thinking, there must be quite a lot of them thinking, wow, how does this guy do it? This doesn't seem to follow anything I've been taught. Okay, what? what's your advice to someone trying to do this? You know, to a new trader who's coming into this and thinking, I just don't get it. This is the bit where, I mean, personally, to me, I get it because I've both done it and I've seen other people do it, and I've had enough time in markets to know what it's all about. But for someone who comes from outside and is thinking, and this, I can't really compute this. He just kind of feels it, he senses it, he puts it on, he's taking it off. It almost sounds counter the message that new traders get. What would be, you know, how would someone, how can you help them relate to this?
It's such a great question, and I get it all the time. And the real answer is there's no right way to do this. Yeah. Right? There's no right way to trade. People ask me, and I don't blame them, they just don't understand it. They say, "Can you teach me how to trade?" So inevitably what I do is I invite them, they sit behind me, and I explain, here's the book and here's what's happening, and these guys are trying to buy and sell, and they go, like, how do I do it? And the answer to them and to anybody listening and to answer your question is, you just need to sit in front of the screen for some period of time. It might take several years, and something is just going to click. Like the news, the fast event-driven news thing just clicked for me. Had I been on vacation that day, I don't know, maybe I'd be selling real estate or something right now. I have no idea, right? But I think you've got to throw out, here's how to do it, and look at this line on this chart, and do a 3-to-1 risk reward. All those numbers are bullshit. You just need to sit in front of the screen. I mean, you guys have had guests on that do totally different things, obviously, right? All different kinds of markets, all different styles, short-term, long-term, intermediate term, options, futures. The biggest takeaway I always get from Jack's books is you have to find something that fits your personality. So somebody could sit with me and, maybe they're not risk averse at all and they're gamblers. They're not going to like what I do because they have to wait like a sniper and wait and wait and wait and, hit a big one every now and again. That person wants to buy breakouts and buy calls and breakouts and, short stocks that are already down 20%. So you have to sit in front of the screen. I think turn off all the TV, all the YouTube, all that stuff, and just be patient and wait, because something will eventually click. It just might take longer than you'd hoped for.
We'll return to the podcast in a second. What are you doing to improve yourself as a trader? At AlphaMind, we work with traders from across the markets, both professional and retail, and trading businesses to help people improve their performance. A focus on developing performance is one of the few areas that is very, I suppose you could say, under-practiced in an industry that is really a performance industry, and where developing key aspects, key behaviors, key mindsets can have a huge impact on how you work, how you perform, how you manage risk, how you increase size, how you maintain your sense of self in the face of uncertainty. Do feel free to check out our services as performance coaches. Go to our website, alpha-mind.net, to know more, or email us info@alpha-mind.net. Now back to the podcast. Yeah, it's a great answer, and it's you used the word sniper there. So when I was working with Amrit, I'm sure he doesn't mind me mentioning it, I decided, wow, you sound exactly like a sniper. And that's what Jack called him, the unicorn sniper in the book he called him.
Yeah.
And I used to, so the way he would do it is he could sit there with the target in his sights. He's looking there in front of the screens day after day, sometimes week after week, with the target in his sights, but not taking the shot, because it's all about the right moment. You don't sit there going in like you say, that there's a lot of traders who, they do the risk reward trade. I'm going to commit X to this trade. My stop's here, my target's there. Your style, I would always say, is if it goes wrong, the get out can be really expensive. That's the thing with a sniper. If a sniper misses the target, or even if they hit the target, but they can't get away, then they're dead. The whole thing about a sniper is you have to survive. You don't take the shot if it means you're going to give away your position and you're going to be hunted down and killed.
Right.
Okay. That's what a sniper does. They wait and take the shot. They assess the environment. They think about their escape plan before they do it. Okay. There's a constant assessment of the environment around them. And they won't take the shot till everything is kind of where they feel it's right.
Right.
Okay. And that's what I would describe his style as, just because it's sitting there and you think it's going up, what he's trying to do is just find a great exit with a mathematical a mental calculation in his head of risk reward.
Yeah.
But, and that way, if he gets it right, he could put some serious size on for a short time.
That's right. That's right. I mean, when these snipers, they'll sit there for 2 days at a time, but they have to change out at some point because they're human. It's a great analogy where the new sniper sits down. He might have that shot, but he's got to sit there and look around for a while, see how people are moving, smell the air, read the wind. It's going to take some time for him to see and feel all those things, and that's exactly right. And that's what somebody needs to do that's new in the business. They need to just sit in front of the screen, be completely confused, realize that chasing this bullshit on Twitter and all this other CNBC is not the way to go. But you can be told that, but you have to go through it and you have to experience the pain. And the other important thing I always tell people is you've got to track everything that you're doing, categorize your trades, because are you guys familiar with Annie Duke? Yes, she's been a guest. Oh, she's been a guest. No kidding. Okay, yeah. So I love her concept of resulting. And for people who don't know what you guys know what that is, but for people who don't know what that is, it's basically you look at the outcome of a trade or a decision instead of the process. So I'll give you a really good example. I know exactly what my P&L is in spiders and Qs for the past decade at a particular time of day. And, I see the data right in front of me, and it basically says you're wasting your time. There's no P, there's no L. It's just a huge time suck. So of course I'm a human, so I still break those rules, but I know right now if I think I see something in the S&Ps right now, I know I'm just wasting my time. Now, I might make money in that trade, but at the end of the day, when I log that trade, it's not a good trade because the stats have told you that, and that's really what this is, right? We're traders are just, we're making widgets, right? And we're trying to refine our process, and it's all about the process. It's not about the P&L. And again, when you're young, it's all about the P&L, and I made this month, or I lost this month. You could have a bad day or a bad week or a bad month, but if you look back and say, look, I've got these rules, my process, all these things still aligned with that process. It's just math. You're just on the left side of the bell curve, and you're going to eventually come back to the middle of the bell curve or to the right of the bell curve.
Absolutely. Listen, there's another thing you said when we just not long ago, where you talked about, I asked you the question, what does a new trader, what are they thinking, or what is a young trader, a relative novice, really anyone in the first sort of 1 to 3 years? I think you're just a new trader still. And you said, traders come to you and say, can you teach me this? It's a little bit like, if someone comes along and they go, look, you're really good at classical guitar. Can you teach me classical guitar?
Right.
Right. Now, even if you can play guitar, the journey to classical guitar to becoming really accomplished at it is probably minimum 5 to 7 years. Okay?
Yes.
Probably
Yep.
10 years to become someone who can earn a living playing classical guitar.
Yeah.
Minimum. Now, it's a performance activity and a deeply skilled activity. You then look at trading. It's the same. It's a performance activity. Whichever way you do it, whichever way you cut it, it's like music, sport, drama, anything like that. It's a skill you have to learn that's very deep, that takes many years to learn.
Many years.
You
Yep.
can teach them the basics of it,
Yeah.
the foundations, but then they've got to develop and cultivate their own style and their own intuitive sense of what's going on. And I guess that's what you did. You found something that struck a chord with you.
Yeah, it struck a, yeah, I think not just because of the P&L, it struck a chord with me because it fit my personality.
Yeah.
To be risk averse, and, it's trading, anything can go wrong. But, if I do find something early in a filing, just as another example, and the stock has not moved, all the sand is at the top of that hourglass. So that's my personality.
Yeah.
Something that's up 10% that I think might go up 15%. That's not me. I'll buy. I've tried it many times over my career. I'll buy it. It'll go down 2%. I'll puke it. It'll go up 20%. It just, for some people, they love it. Oh, I get a chance to buy more. And you have to sit in front of the screen and feel it in order to figure out what fits best for you, because there's no right way to trade.
And you tell me you didn't do psychology, you feel it. That's psychology.
Yeah.
It goes through every bone in your body,
Yeah,
every
you're
muscle
right.
in your body. It's neuroscience.
Yeah.
Over to you, Mr. Andrew. Go on.
Yeah, I remember in about 1981, it was pre the futures market opening up in London, which I was in the futures business as we were getting ready for London to open. And I remember our boss saying, "Okay, Randall, you got a 5-lot position. You're going to trade Eurodollars on IMM." So, and I'd never traded before. I'd read the books, right? But the books didn't give me anything until I got thrown into that deep end and was told, and I was so damn nervous. I mean, I'd barely in the markets, and I was trading a 5-lot and getting in, getting out, and, 2 ticks in profit, taking profit. So 3 tick loss, I'm out, and I was a mess. But I did quite a lot of trades across the day, and he was a great leader, because he stepped back and said, "Look, you've done like 15 trades, you made a tick, but you learned more than making a tick, didn't you?" And actually, I think there is a deep end nature to trading, because it is a binary thing, right? It's going to go up, it's going to go down. You click here, you click there, but it's the consequence of that on you, how you feel when you suddenly got reality taking place in real time in front of your eyes, and it's either going your way or it's not. Because going your way, you think you're a hero, and then the next trade is unlikely to be as successful. But I think it's the immersion is part of it. If you and the books are great and they're wonderful, but they don't immerse you into the reality of being a trader. And it's until you take that step, you open up an account, you go live with a limited amount of money in, to feel what that means to you, because your personality will feel it different to somebody else's.
Yes.
And then, of course, is what you're actually trading is important. So the products themselves, you'll eventually learn, will have their own personality. So you're trying to match your personality with the personality of a product you're looking to get a little bit intimate with, to try to work out, how do I take advantage of understanding where this might go next? Yeah. So I think there's lots of alignment needs to happen. So I think that's where clearly with you, that's where your flow state of, kind of working it out as work, because you've aligned your own trader personality with something that personality aligns to in terms of a product in the market.
Right.
Because there's probably some products that you stay clear of. And some you embrace. Or don't you? You just like, anything moves, I do it.
Yeah, anything that moves. I mean, the only thing, if something is illiquid, maybe I'll be smaller. But if I, in air quotes, know where it's going to go, because maybe there's a deal announced, because I have all these models or whatever. if it's really thin, I'll still get big in it, but generally I try to stay away from and like a micro cap, I won't even bother touching. But to add on to what you're saying real quick, in order to have to feel the market, I always tell people never paper trade. It's like playing a boxing video game. Yeah, you could win, but like get in the ring, right? It's the same, and feel it. You'll never feel the market paper trading ever. I'm just not a big believer in that. So that's another piece of advice, unsolicited advice that I give to new traders.
Yeah, because get involved, limit it, get that exposure, but have maybe a mentor of sorts, as you've become to many by the sound of it, some people that have asked for your guidance, to at least be that person looking over your shoulder as you dive into the deep end without a lifeguard on duty, and because it could get difficult, and you need to kind of be helped through that process as well.
Right.
If you're a novice.
Rick, I'd love to ask you to share with us your best experience and your worst experience since you started trading. That doesn't necessarily mean the trade that made the most money or the trade that lost the most money, although they could be connected, but just to talk us through and describe what they were.
I think with most people, some particular trade probably comes to mind. This might be a boring answer, but the best experience, and it happens probably a couple times a week for me, is I just used the word matrix before. I'm in front of the screen, and I don't know if it's the right amount of coffee I drank or the time of day or the workout in the morning, but I just feel so connected, especially when there's an event-driven situation and the stock is gyrating up and down. I can almost, if somebody was sitting next to me, I could say, watch, this guy just made a mistake selling it down to 8. He doesn't understand that the going concern is blah, 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 blah. Watch how the stock's going to go back up to 950. And then it does. It's not because we're in the business to make money, not be right. Mm-hmm. They sometimes they go hand in hand, but the best feeling is, again, when I just feel so connected to the market and to what's going on. And then, the worst, I guess, is kind of what I alluded to before, like these, like if my mental state was like a stock, it's just like marching lower and lower and lower in these like very dry periods. Because, I'll say to my wife, she'll say, oh, you had a great trade earlier in the month, and I said, yeah, I made my whole month or 2 months worth of trade in that one day, but I've gone these 2 weeks without doing anything. And she says the same thing every time. She said, I've heard that for 15 years, like it's kind of, but the pressure and the fight or flight of, if I'm not in front of the screen, I'm not making money. It's not like I'm running a portfolio and, crude oil's working for me today and this is working for me today. If I'm not in front of the screen, I'm not making money. It's like I'm a knife salesman going door to door. If I'm not out hustling and killing myself and waking up very early and being really up to speed on everything, it's hard. I can't make money, right, if I'm not in front of the screen. So hope that answers the questions.
We will return to this podcast shortly. Just a quick reminder about our podcast sponsor, the Society of Technical Analysts, a brilliant organisation which help traders and analysts from across the spectrum of markets. They have many fantastic programs, including the new Technical to Trading System program. Also, do check out their brilliant home study course, and AlphaMind listeners can get a discount on that. Just go to our website, alpha-mind.net, to find out more about that. You can find out more about the Society of Technical Analysts by going to their website, technicalanalysts.com. Now back to the podcast. No, it's great. It really talks to me about your connection to this, and almost you feel, like we say, deeply connected to that, your particular product and market.
Yeah, I'll bring up a really good point to add on to that. I almost never take vacation, but my wife and I took a vacation, a few weeks ago. And I think during the time I was there, I'm trying not to look at the screen too much. I have no positions on, but I need to be aware of all the news that's come out. So, it's taken me 4 or 5 hours to go through all the screeners and everything that I have. So I feel caught up, right? I feel caught up, but I get back in front of the screen, that Monday morning or Tuesday morning or whatever we got back. And I traded, I don't remember, it was like a 13D or something. And it just never crossed my screener when I was going through all the news. So luckily it was a small position and my spidey sense went up on it, but I was basically buying old news up, 5% or 6%. And then I said, shit. So if I was in front of the screen, that would be ingrained into my DNA. I would have seen it. I would have seen another headline. So, when you're away, you think you're caught up, but it takes a few days to sort of let the, let the market soak back into your skin and your eyeballs and your DNA, and then you can feel connected again, if that makes sense.
I love that. I love that, into your skin. Yeah. I work with someone who I consider very much an event-driven trader, even though he has much longer-term positions. And he's a guy at a fund. So it's in a funny sort of way, it's the same as you, but in a different, represented differently.
Yeah.
And this guy is phenomenal. And I remember there was an event, and I don't want to reveal anything about who he is, but I won't mention the event, but there was a big market liquidity event a few years ago, and his P&L for the year evaporated in a matter of hours. And, when that happens, he loses all sense of where value is. It's kind of like there's no anchors.
Oh, yeah.
Okay. So his connection to the market breaks down. He's out of sync with it. And he feels really, well, in the past when that's happened, he's felt really lost. But on this occasion, I remember him saying, it'll come back. I just got to let it come back. I'm not going to rush in there. I'm not going to do anything. Whilst I'm not synced, if I'm going to play the game unsynced, I'm just giving the money away to anyone else.
Yes.
What's the point? Well, why would I do anything? I might put a couple of little things on to start getting a feel for it again, but they're nothing more than sensors in the market.
Yeah.
And he said, this was a big hit, so you've got to deal with the hit as well. But he said, this time I trust it to come back. I'm not going to worry. I'm going to, have a few weeks, go out for a few, meals with people, maybe take some time off. But I'll put myself in front of the screen most of the time, and it will come back. And it did, and he ended up running. I think he had one of his best ever years in many, many years at the end. Okay, and it's that sense of, a little bit like you say, it'll come back, but you need to do the work. You need to be there. You need to allow yourself to reconnect with it, but you can't force it. On the other hand,
that guy either has that mindset or that attitude in his DNA, or he has enough experience to have had setbacks like that before to be able to compartmentalize and say, okay, this was a bad one, but this happened to me X years ago, and then Y happened after that, or both. And you one of the first questions you asked me was a good one. Why did I define this style, or why did I get into this type of style? Personally, I don't know if I could deal with that. I don't know if I could have a 4-month worth of P&L down trade. I don't know. I don't know if I could come back from that. Maybe I could. I mean, if I had a coach and you'd say, show me your track record, in a minute you'd say, hey, dummy, come on, look at your track record. This is obviously going to come back. But when you're in it and it's you, it's hard to take your own advice, right?
It is. But, I've been there. I've had 6 months of continual, 7-figure, became a big 7-figure drawdown. And I thought that was the end of my career. And I was still early in my career then. That was probably my 8th year of trading. And I just thought, I've lost it. That's it. I was in a mini crisis. I was completely out of sync with the market. And I often talk about the time where, if there was a shop that sold winning trades, I could not physically go into that shop and buy a winning trade. That's where I was.
Yeah.
Okay. And, I always remember the support of someone really who I worked with at that point was really crucial in making me sort of move on past that and rediscover my, my faith in myself. And I started making money again, and slowly, surely I crawled up. And I remember finishing up that year and I was thinking, wow, how did that happen? But it does, you know how to do the job, and you just have to believe in yourself.
Yep. You need a good coach, a good mentor, or both.
Yeah.
To guide you. And admittedly, even just a few years ago, I hear the word coach, I roll my eyes, and I got one, just a friend of a friend who was doing it because I was working on this new system and struggling with it outside of event driven. And it was very, very helpful. I mean, not only was he pointing out things that were right in front of my face, because as you guys know, you're a trader, you're too close to it is an expression I use all the time. But sometimes you're just too close to it and you need that person to, help you out, mentor you.
Well, to ask you questions you won't ask yourself. That's what someone once said to me, wow, you're asking me questions that are so obvious, but I never asked them to myself.
Right. And they're so obvious in hindsight, right?
Yeah.
But you need that person to ask it because you just don't see it. You're too close to it.
Absolutely. Mark, I mean, you must be loving these conversations. We're talking about subjects that I know are very dear to you.
Yeah, it's great to hear someone share the reality of it with real life examples, and I think that's super beneficial to our audience. Well, I love the phrase that you mentioned, Rick. Just going back to the concept that I think we may have started, this concept of presence as an intelligence, and that then spurs emotional intelligence and every other good stuff about performance. But to a point of understanding that you've got to get to a level of being where you're smelling the air and you're feeling the wind. Is a nice little phrase, because that then allows you to click into that personality of you being a trader very effectively, because you're then sensing the opportunity. If you weren't smelling the air and you weren't feeling the wind, you may decide not to trade that day. But it's knowing what that condition is, and it's relating to it in a way that you can make a decision about your trading style, about just how connected you feel or you don't feel. And I think we've had conversations we're running a course at the moment, and someone there was saying that if he wakes up and doesn't feel like he's connected, he does not. He has discipline to say, I'm not trading. I think there's a certain discipline that comes with this, of sort of monitoring your own state to the point where you think, yeah, okay, I'm good to go. I'm sensing it, I'm feeling it. I'm now going to apply my styles to the market and commit, to that process.
Yeah.
It sounds like you've sussed it out. But I think it's a good sort of way of summing up your edge in a way.
Yeah, and to add on to that too, you can put all this into zeros and ones, right? Like if you're categorizing everything that you're doing, time of day, style, type, what you were thinking at the time, you can probably put into zeros and ones exactly what you just articulated, right? Mm-hmm. You wake up, you're not feeling it. I feel like that all the time, but I still make sure that I'm in front of the screen. And it's almost like I tell myself, try not to trade today. But if something very obvious is going to come, it's almost like I black out. It just happens. If that makes any sense.
So it's almost like a second nature to you, isn't it? You got to the point where you just click into that state.
It feels that way.
Yeah.
Listen, I'm mindful of the time, and we've got to bring this to the close. Because honestly, I feel we could talk on for hours on this subject. And, just before perhaps we wrap it up, I'm minded of something that Linda Raschke once said to us. And I can't remember whether she said it in the podcast she did with us or whether it was the long chat after we finished recording. It should have been another podcast. But she said that, the way she looks at sort of drawdowns and setbacks is, she has a process which works over time. And there's going to be points where it doesn't work, or, she has an extended drawdown or an event hits her out of the blue and an outlier, and it takes a big downdraft in P&L. But she trusts her process and it always comes back, and it's worked for her for 4 decades or longer. And it felt to me like, there was an element of that in what you were talking about there.
Yeah. Process. Shapiro says it best. He said, over time, not every time.
Yeah.
And it gets back to the whole resulting Annie Duke thing. And I think that's the key. Hopefully people figure that out. You can't be, you can hear me saying it and hear you guys saying it, but I think you need to experience it and feel it.
Yeah, absolutely. Absolutely. Mark, do you want to just perhaps bring this to a close?
Sure. Well, we're super grateful, Rick, for you being so frank and being willing to sort of share, your backstory and your current story with us and the audience. For me, I do like this is a smell the air sort of feel the wind thing, and you're not going to know it until you're in it, and you feel that struggle and understand what that struggle is like in reality. And I think you also point out that you need to be patient through the doldrums and stick with it, and understand that that's a degree of suffering that you might have to put up with in markets. Those periods of time where nothing's going on, but something might suddenly go on. Edge of the seat, you're almost like a fireman. You're in the fire station, there's a fire, bang, and you're on it. And I think that's a trader mentality similar to, I guess, being in the armed forces. You're sitting there waiting, but suddenly when it kicks off, you have to be as sharp as a knife to be, executing your plan at precision with discipline and on process. And clearly you've got that sorted out. So thanks again for joining us. It's been an absolute pleasure.
I'm very grateful, guys. I think you guys are doing great work. I appreciate your time.
Thank you very much. And great to meet you, Rick.
Great meeting you guys.
Thank you for joining us this week. We do hope you enjoyed the episode. If you want to know any more about AlphaMind and our services, please do check us out, alpha-mind.net. Thank you to our podcast sponsor, the Society of Technical Analysts, the STA. You can check them out at technicalanalysts.com. And as a reminder, listeners to this podcast can obtain a small discount on their brilliant home study course. You can find out more about that on our website, alpha-mind.net. We look forward to you joining us for future episodes, or do feel free to check out our past back catalogue of episodes on the AlphaMind Podcast.com. Have a good week.